Good afternoon, everybody. This is Somesh from Sa-Dhan. Thank you all for being here. We are still seeing the numbers of participants going up. So can we just wait a minute or two? We're going to cross the Zoom level of 100. So we ask for some more space also.
Hi, good afternoon, everybody. This is Amit here from Microfinance.
Good afternoon.
So good afternoon and welcome to Sa-Dhan's webinar on evolving fraud landscape. Thank you all for being here. We have a very exciting number of speakers here, very senior people in their fields. And so I'd like to welcome, starting with Mr. Nanaya, who's the MD of Equifax Credit Information Services. We have Mr. Sadaf Saeed, who's CEO of Microfinance, Mr. Kuldeep Methi, MD and CEO of BFS Capital, Anup, Risk Head at Annapurna Finance, Sharmila Kunguma, who's CRO at Spandana Spurti, and Naveen Kumar Malik, CEO of IIFL Samasta. We also have Sucharita Panikar, who will be coming in after the panelists to share a presentation on known fraud exchange. And after that, we would be having a question answer session immediately after that. So thank you all. And just to let you know, this I think this topic has been the need of the hour. I think as the pandemic began easing, I think a lot of our members were saying that this is a point of discussion for all of us as we are seeing in the field the incidence of fraud going up, and a lot to do with staff, topics related from insurance to ghost lending and others. And as part of Sa-Dhan's knowledge practices, we've been doing work on other current issues like HR, risk management, and compliance. So we usually invite a lot of people to share their experiences, and we hope that this can be a learning tool for others in the sector. We do record and disseminate this information. The idea is to even make some best practices out of that. So, and to showcase to the regulator that we are very responsible at self-management as the issues come up. So I'd like to now welcome Mr. Nanaya and to share from his deep and rich, insightful knowledge of the Indian microfinance sector. And so if you could just please come in and give us the keynote address today, Mr. Nanaya.
Thank you, Mr. Nandan. Namaskar to everyone, and thank you for inviting me over for this event. We certainly are delighted and pleased to be partnering this entire new initiative which Sa-Dhan is leading. Just broadly from the role of a credit bureau standpoint, I think one of the bigger aspects that we have been supporting the industry is on the credit risk side of it. How do we ensure lenders protect them from the credit risk? And that's where I think we play a significant role. and the data is matured enough, and I think we're playing a very important role, and we partner with all of you to ensure that you're able to control the credit risk. The second major thing that is emerging around is the potentially a fraud risk. If you look back for lenders' point of view, these are the two broad risks that one has to protect themselves with. Either build a shield around it or protect themselves. So the one is the credit risk, another one is the fraud risk. So credit risk, I think it's a very good work that we have all done so far, and a lot more work can be done with the evolving regulatory framework and more data coming into the bureau. I think the credit risk part will get even better than where it is at this point in time in the next couple of months with household income data, with FOIR calculation. I think the credit culture will become even more responsible with the evolving framework. Given that scenario, I think building something for fraud risk has become very, very important for the industry, not only in India, around the world, right? So we've been on the fraud risk management side for a while in most of the markets in the globe. The platform is called Luminate. Sucharita is going to talk a little bit more on the platform in terms of what the capabilities are. The base platform for fraud risk management remains common across the geography, but what is different is the application and the requirement in each country, each segment is very, very important. I think that is where we're bringing in the global platform and customizing it to the local requirements. So that is the journey that we are in. And as part of the journey, what we've done is we've got this platform for the fintechs in the country. We have launched this platform with Association of Fintechs, which is called FACE. The leading fintechs have come together to form an association called FACE. So we have collaborated with FACE to define fraud, set the fraud rules, and set up this fraud risk exchange for fintechs. Now, what we're solving for fintechs is the known frauds in that first phase, but in the phase 2, the real-time inquiries are likely to flow through this exchange to understand if there are any potential syndicate fraud patterns that we're seeing, or burst out fraud patterns that we're seeing. All of that stuff can be looked at as the real-time inquiries flow through this Luminate exchange. So that is the second phase that we're working on with fintechs. Now, platform is the same, but what we solve for fintech not necessarily will address all the requirements of microfinance in the industry. Given our understanding of microfinance over the last couple of years in India, and given our understanding in interaction with all of you, I think we know what needs to be done to customize this platform for the requirements of microfinance in the country. So while the platform is common, the solution is getting tailored to the specific vertical. I think it is not one fits all. What we're trying to solve is specific to the industry, and which I think, in my personal view, is extremely relevant and extremely important for the solution to be effective. And also we're trying to protect the industry from potential fraud risks. So fraud risk could emerge from any side, anything, it could emerge from a document, or emerge from identity, emerge from influencers. It could emerge from all these angles. While we may not be able to solve for everything at word go, but we'll certainly solve for a few things in the initial phase. And as we travel the journey, we will continue to solve for more thing on the fraud risk. Anything on the risk is an evolving subject all the time. As the risk moves, the protection around the risk also has to move. As fraud risk is the same, the fraud risk keeps moving, but we also need to have solutions which catch us up with the emerging fraud trends and the fraud risk for the industry. So that is the journey that we are in. Obviously, the underlying technology is extremely advanced technology that we use, and we will end up using technologies of ML and potentially over a point in time AI as well to identify potential fraud risks. And the fraud risk is not visible on the surface, right? It is underlying in the surface. So we got to identify the underlying trends to be able to identify the fraud risk. As we go forward, initial phase would be a lot more simple. Known fraud data is contributed, and everybody has an access to the known fraud data to understand as to where the fraud has happened, and and make decisions based on that. But going forward, I think the solution will evolve. You will hear a lot more about that from Sucharita in terms of how the solution is expected to evolve over a period in time as the data builds up. I think critical success for any exchange, any solution for that matter, is the underlying data. That is what I think can only be built in collaboration, not built in isolation. So we can only build it along with collaboration with the industry. While we solve for industry, industry has to collaborate with us in terms of contributing the existing data that is available on the fraud risk that has already been identified in the marketplace. And as fraud risk, as you identify going forward, needs to be contributed to the exchange. Based on that, we will keep building our solutions and outcomes that will help you to decide and protect yourself from fraud risks. We've been at the forefront of innovation in the country. We innovated on the employment exchange, and all of you are very, very close to it. And we were the first one to do it, and we are the only one to do it in the country. We always call this as tagline of only EFX. So it took a lot of time. It's a lot of hard work, and I think support from all of you is highly, highly appreciated. On Employment Bureau, we are where we are today to be able to solve for some of the industry needs on that side of it is because of the collaboration with all of you. I think we have reached the stage where we are on Employment Bureau, progressing extremely well. A lot of practitioners seeing tremendous values, not only value in terms of they're seeing cost savings, right? This is very, very important. So employment was an innovation. Now fraud risk for microfinance is the next innovation leg that we are in. The good news is that I think a lot of consultation has already happened between the core committee set up by Sa-Dhan and our teams to define what is fraud. The fraud definitions have to be different for different industry. So what is the definition of fraud in the microfinance, I think, has been agreed upon. I think that is the first basic step, which I think Sucharita will cover that in our presentation as well. So we've progressed on all of that stuff. We have the platform ready. All that we need to do is to start working on customizing the platform to meet the microfinance requirement, which could be a couple of months from now. As we speak today, depending on how things progress, I think we could be quicker in going live as well. So, as I said, broadly, our objective is to work with industry, support the industry to reduce the credit risk, and also protect industry from fraud risk. These are the two areas that we are focused on as an enterprise, as a company in India, and Equifax globally are extremely focused on these two broad areas. In addition to the employment exchange that we run across the globe very, very successfully and solve for some of the credit risks and or many other applications that come with the employment exchange. So. I'm very thankful to Sa-Dhan for leading this initiative from a microfinance industry standpoint, and every interaction that we've had so far with the core committee has been a learning experience for us. I tend to strongly believe that the knowledge that is there in the audience on this call and the knowledge that is there with the practitioner is extremely valuable. For us to be able to deliver a solution which meets the industry requirement, knowledge sharing is very, very important, and we are very keen to learn, and I learn in every interaction, and every interaction has been very satisfying in terms of what we learn from that interaction about what happens really in the field. And I've had the opportunities of going and sitting in the center meetings to understand how the industry works. So not only we sit here in this office to understand, not visit your offices, but I've also made the attempt to go and sit in the center meetings to understand how the entire microfinance industry works and where can we bring in value to ensure a frictionless journey for the customer, right? And at the end of it, the customer is at the center of everything that we do as an organization, right? So how can we help a frictionless journey for the customers by working with the practitioner? So that is the constant innovation that we are in, and the Luminate exchange, the fraud risk exchange that we are in the process of launching for microfinance is a one step towards that innovation. And very, very thankful to Sa-Dhan for anchoring this program, and we are extremely delighted to be partnering with the industry, and grateful to all of you for giving me this opportunity to speak on this forum. Thank you very much, and wishing you all the very best on this initiative.
Thank you so much, Naya, and thank you for the kind words. We feel the same way. It's been great working with you across all these new things. And you are right, Equifax has been at the forefront of leading innovations in the sector over the last decade or so. I'm sure the platform is going to be a great success. I'd like to invite now my colleague Shri, who's going to put a few slides, just 3-4 slides before we go to the next speaker on the fraud situation in India. Yeah.
Good afternoon, everyone. I hope you can see the presentation now on your screen. We will start the presentation with some data from RBI annual report, from the recent annual report. If you see on the screen, these are the number of reported frauds for each legal form, like private banks, public banks, financial institution, and small finance banks.
Hello. Hello. The screen is not moving.
Yeah.
It's not yet moving. First slide only.
Yeah, now it is at the second slide. Yeah.
Yeah, okay. So as you can see on the screen, the first table is a
Can
table.
you just change the display setting because it's showing only your screen, which is not in the PPT format? Yeah.
Is it?
Yeah.
Correct. Okay. So we can see over last 3 years, from 2018-19 to 2020-21, the amount involved in fraud has gradually increased, and 2019-20 has recorded for the the highest amount involved in fraud. The second table is showing the operational area-wise fraud, and these are all frauds reported to RBI, and the amount of fraud is more than 1 lakh. So if you see, the maximum number of frauds and the amount involved are from the advance given to the borrowers. We will like to share some few recent incidents we have observed in the field, which can be a good example of frauds. We have seen in several cases, loan officers of one organization have conducted a small amount of frauds, that they have collected money from the borrowers as a partial payment, since because of the pandemic, there is restrictions in operations, microfinance operations, and it was not uniform across the geographies. So in many places, the reporting of the collection of money was delayed. So therefore, there was a good opportunity for the field officer or the branch level staff to misappropriate this money. So we have seen that in few cases, there was such incident, and then the staff will resign from that organization and will join another organization as a fresh candidate. However, this kind of incident can be easily verified or highlighted, as there are checks and balances in the MFI's recruiting process. One of is Equifax Employment Exchange Bureau, where this kind of frauds are reported from the MFI side. Another incident we have observed, that in Theni districts of Tamil Nadu, a certain branch of a certain MFIs, where the branch level staffs have forged the death certificate and other required documents of borrowers and submitted that to the insurance company and mobilized 16 lakh amount on behalf of the borrowers, though the borrowers were very much alive. Another case of fraud which we have observed, which were reported to RBI also, and RBI was requested for a detailed report from us, is that there is an organization called Mother Teresa Foundation Trust, which were operating in East Champaran, they have posed themselves as a microfinance organization and investment organizations and asked they were particularly targeting microfinance borrowers and asked them to invest around 22,000 rupees in their company, where they promised that the members or borrowers will get 2,500 per month for next 24 months. These are the few incidents of frauds we have observed. Also, in recent past, there have been observed from some institutional frauds. We all know about few cases which were in the microfinance space, where the management has given the loan to a fixed status or host company and misappropriate that money. So here are few types of frauds which can be seen in the microfinance space. That is, loan officer issuing ghost or non-existent client, these are related to disbursement. So loan issued to ghost or non-existing client, bulk loan to agents who then will channelize this money to some other sources, other activities other than microfinance, staff or employees issuing fictitious loan on their names, also asking for fee for accessing loan from borrowers. There are also some, because due to pandemic and other reasons, the digital transaction and mostly the digital repayment is going up or increasing. We have seen few cases of digital repayment related fraud also, where apps posing as a microfinance loan apps and then collecting money from the borrowers. Also, there are some incidents we have observed where cheat fund organization or unauthorized organizations which are not or registered as a microfinance organization, posed as a microfinance organization to the borrowers, and they are taking money from the borrowers. Also they're taking deposits from the borrowers also. There are some incidents of insurance related fraud also we have observed. One we have shared with you already. So there are certain checks and balances already in the microfinance organizations. These few checks and balances are internal audit, maintaining a transparent MIS system and transparent governance, also strictly implementing industry code of conduct and transparency at the branch level, regular sensitization training to borrowers, field staff on ringleaders, ghost lending, and the consequences of such cases or involving ringleaders in the operation. Also, in many cases, MFIs are preparing business targeted, keeping in mind in the demand of the certain areas. Also, a reason for increasing frauds could be that the pressure put on a field staff, which resulted him or her going to an agent or a ringleader for sourcing loans. So many MFIs are also, as a practice, preparing their business targeted, keeping these things in mind. For fraud risk management frameworks, there are three major factors which can increase fraud. Here we have mentioned, that is, one is the opportunity. So the opportunity is the circumstance that allows employees to misappropriate. Pressure is the motive or incentive for an employee which led them to commit fraud. Rationalization is the frame of mind which helps them to justify their frauds. These three factors could be a major factor in case of increased fraud. So there could be four 5 key components which can effectively be part of a fraud risk management. Those are risk governance, risk assessment, fraud control activities in an organization, fraud investigation and corrective action taken, and fraud risk monitoring activities.
Thank you, Shri. So I'd like to call Sadaf now, CEO of Microfinance. And Sadaf, I'd like to start off by congratulating you on the wonderful performance. We just it's been in the news, great financial performance, and so
Much.
I think Muthoot is now touching 2 million clients and over 6,000 crores in AUM. So Sadaf, would be nice for all the participants here if you could share your experiences dealing with fraud during pandemic, and if there are any organizational practices or any policies on prevention of fraud, if you could share with everybody here. Thank you.
Yeah, thank you, Nandan. I hope I'm audible. Yeah, so
Yes.
I think thank you, Sam, for inviting me, and this is a great topic that you have chosen to talk about. This topic is very close to my heart because all along in my life I've been a risk management person. So this is something that what we do day in and day out, how to kind of control risk and make sure that there is lesser leakage in our financial system. So I think this is a topic which was needed to be discussed, and this is important for all of us. I would like to begin by saying that traditionally we have always thought about fraud as a event which happens outside the system and because of external circumstances or somebody outside the system. But I think the definition of fraud is changing very fast. See, underwriting in a loan is a job where we need to understand the ability of the customer to repay. But there is a concept of understanding the intention of the customer also to repay. There are multiple tools available in the industry to underwrite and understand the capacity of the person to repay. You can do, we have been doing cash flow assessment for years. We have been doing all sorts of checks, and now we can also do bank checks and stuff and credit bureau reports to check the ability. But there is no tool to understand the intention of the customer to repay. That is the main thing. I think the only way to kind of ensure that we prevent fraud and there are less number of fraud is to be one step ahead of the fraudster. And it's very difficult because everybody who is intending to come and cheat you will always be ahead of the system. And that's where I tell you that most times there are certain people involved in the system, people who are aware of the system get involved in the process and defraud. And more as we go, the industry is becoming more organized in terms of these fraud activities. I think what we discussed, the presentation was wonderful, but I think what we were discussing were only the tip of the iceberg, and what we have been talking about for a donkey's years, that what kind of frauds can happen. If you look at the banking industry itself, and I have a report in front of me which says almost 138,000 crores of frauds were reported in year 2021, FY21, and 138,000 crore worth of frauds are only frauds above 1 lakh rupees. And I'm sure, and this is only for the banking industry. And I'm sure if you include the entire NBFC industry and also frauds which are of a smaller amount, this number will go to a much larger number, maybe double up. The NPAs for the whole banking industry were at a peak were around 10 lakh crores. I'm not saying all NPAs were fraud, but a part of it was fraud. And by our experience in microfinance, we have seen by and large our customers are good customers, they want to repay. And we have seen in this pandemic as well, even with all sorts of second wave, third wave, we are back to around 95-96% of collection on time. So by and large, 96% of our customers are honest and they want to repay. But there are those 4% customers who have a capacity issue or an intention issue where they are not paying. So even if you assume that okay, half of them have intention issue, so 2% of the customer base, and considering that industry today is at a 2,60,000 crore, and we are talking about around 2%, so 5,000 crores is a fraud amount that has happened. So that is a large amount. That's a huge amount that we have lost. So I think all the steps that we are taking is important, and I'm a worried man today because this is a amount which has happened by traditional means. Now you have much more advanced kind of frauds that are happening and syndicates that are happening. We have not talked about at all about cyber frauds. We are not talking about phishing, wishing. There are cloning. There is like cloning of your card data. There is cloning of your social media profile and cloning of your information, email ID, all of these. And these are becoming very common. I can tell you my practical experience. Somebody sent around a mail in my whole network cloning my email ID, which was not exactly my email ID, but close to my email ID, and asking everybody to send some money. So this is called cloning. So these kind of activities have become very prevalent now, and the more and more digitization that happens in microfinance space, and especially considering the type of customers we are dealing with, which are largely vulnerable segment, not very savvy, not very well educated, the more and more risk we face. So I think this is the need of the hour. And I think more from the traditional ways of preventing fraud, like in terms of GRT, ensuring ringleaders and preparing a database and all that, that's important, that we need to do. But apart from that, I think there has to be a thought process around how to prevent these cyber frauds, because this is going to increase multifold. And the challenge with this cyber fraud is that it can happen in a very short span of time, and it can be of a very large magnitude. So that is very important. And I think sensitization of our clients, sensitization of our customers, employees, and also ensuring data protection is the key. Moreover, I think early detection and learning from the trend is very important. I think Nanai mentioned that understanding and studying data is important. And I think that is the key, because as I mentioned, to prevent frauds, you have to be one step ahead of the fraudster. And how you can be one step ahead of the fraudster? If you know that what can happen, and that you can only learn by putting a proper repository of information. So a next event has happened at a company. If you know that these kind of events can happen in the company, then you will protect and you will build safeguards around that. So that is very important. I think there is an initiative by industry SRO called Radar, which has been put in place. I think a fraud bureau that has been put in place by Equifax. These are all, I think, tools with which you can learn that what kind of frauds are happening in the industry and prevent frauds. This is very important. Fraud is can only be controlled if you employ preventive measures. I think there is no solution to fraud. There is better underwriting, tighter underwriting that you can eliminate. But the only way to prevent frauds is to learn from what is happening around you and be one step ahead of it. That is very important. If, as we speak, RBI has already made a rule for banks that if a fraud case is announced as fraud by one bank, all the other bank also has to recognize exposure to that client as fraud. And fraud means 100% provisioning. So all the banks are up in arms and they want to ask RBI to reverse that. And I'm sure sooner or later RBI will enforce those things on NBFCs also. So this is very important. This is very sensitive. And I think there are initiatives that have been taken, and this is one of it, sitting here and talking about it. But I think what we need to think is much beyond than what traditionally we have been doing. We need to think about how to prevent phishing attacks, how to prevent phishing attacks, how to ensure that at the industry level, we are able to share this information very, very fast. RBI has made a rule that if there is any cyber attack within 2 hours, you have to inform the government of India, you have to inform immediately. I think similar approach should be taken up by the industry. If there is any such instance, then it has to be brought to the knowledge of the industry. We are already facing a lot of risk. There are many apps that have come in which are offering kind of a daily loan in the name of micro lending, and they get into your system. They get all the information of the customer, and then they force the customer to pay very high rate of interest. And a lot of cases of suicide has been reported, many in Andhra, many in Bihar, and other cases. RBI has taken action, almost like 40-50 such NBFCs have been kind of shut down, and 40-50 such apps or hundreds of such apps have been shut down. But these things keep mushrooming, and obviously if these things will happen, people would have reluctance in using even our digital methods. And there are ways that people will be, there are certain people who would be interested in manipulating customer and taking information. When we are going to implement digital more and more, the modes of collection will shift from cash to digital, the risk increases. So how to prevent those risks, how to ensure that we collect seamlessly, that is what is needed, I think, for the industry. And I think the key is to ensure that you share data. The key is to ensure that you build a repository. Key is to ensure that quick alert should be sent all across the industry that what kind of frauds are coming into light. I think that's my 2 cents on it. I think I'm happy to share anything else that people want to know. Yeah.
Thank you, Sadaf. I think all these points have been well taken, especially the emerging threat of cyber frauds. And I hope we can, with all the tools that everyone is putting into the sector, we can be part of that early detection that you are talking about. So thank you for that. Can I now invite Mr. Kuldeep Mehti over? Mr. Kuldeep is on our is a board member, and then he's also, as everybody knows, a very prolific writer. He writes and blogs a lot about the sector. He's had 2 decades as a social worker, and also winner of both Village VFS as well as Kuldeep have recipient of many awards. So Kuldeep, please come in and share your experiences.
Thank you, Somesh-ji. Good afternoon to all of you. And thanks to Sa-Dhan for organizing this kind of webinar, which is really very important as of now. And I think all the practitioners, we are facing the same problem because in the COVID situation, we are facing more problem. As we started long back, so usually that time there was 2 kind of fraud. So at the time of disbursement also, we used to face the same problem. So during that disbursement, we used to have the cash disbursement. So there are a lot of incident happened because we do not have any control on the customer part. But now at least I think most of the MFIs, they stopped cash disbursements. So now they have moved towards digital lending or through bank NEFT. So I think one part is already we have covered. So now everybody is facing the other part, which is the collection part. So I think in terms of collection, mostly we are facing 4 kind of challenges, 4 kind of frauds happen generally. So one part is the loan officers collects the money, but don't deposit it to the office. So that's one fraud happens. Second part, the loan officer collects the money, but they takes time to deposit in the office. So maybe they're using that money for 3-4 days, 5 days, 10 days. And that is also a kind of fraud. And thirdly, during this delinquency time, so you don't know whether this loan officer is charging any extra money or not. So sometimes they communicate to the borrower, okay, you had a default of, say, the installment is 500 rupees. So you have made a default last time. So you have to pay 500 plus 50 rupee. So that 50 rupee basically collected by the loan officer, and we don't know. I mean, the MFIs don't know what is happening in the field level. And the other one, which is also happened very occasionally, that is the right of customers. So because in the system, so we have written off the customer, whatever loan they are having, but these field steps go to that particular borrower, collects the money, and whatever money they collect, they keep it within them only. So I think these are the few things practically we all of us facing. But whatever it is, my own personal understanding that we hardly give time or hardly invest on the training part, or basically what happens most of the time, MFIs focus on the growth. So they give targets, so they have a very aggressive business plan. Okay, so I have to have 100% growth year on year basis. So maybe I have to open 100 branches, 200 branches every year. So I need ready-made staffs who understand microfinance very well. But what is my understanding, I mean, when you take a fresh staff from a rural people who just passed out higher secondary or something like that, you trained them, I think they became more loyal towards the organization. Rather, you are taking a staff who is having experience of 8 to 10 years in the sector, and he has worked in 6-7 entity. So he understands everything about microfinance, and he don't have the loyalty towards the organization. So I mean, we forget to teach them that we always teach them, okay, this is a business. I think we have to educate our staff. It is not a business. Okay, it's a business, but it has a positive impact also. I think that kind of relationship we should have with the staff. We should teach them that if you are doing fraud, actually you are taking the money of a poor people who is surviving for their own kind of livelihood. I think that is very, very important. I think we should invest a lot of time and money for to educate and train our staff, to build the loyalty, to organize a lot of employee engagement program. I think that way we can reduce the fraud. But otherwise, I mean, whatever you make yourself digital or whatever it is, I think until unless still we are very much dependent on this level of staffs, until unless we make them responsible, we teach them what to do, what not to do. And until unless we create new people for the sector, I think it will be very difficult for everyone. So, I mean, request to everyone, not focused to get, I mean, we should be focused to create more stuff from the rural area, or just, who really keen for job. I mean, really they need the job. I think we should promote them. And I think that way we can reduce. I mean, it is very difficult to be 100% fraud proof, but I think yes, digital is one way. I mean, once we transform ourselves digitally in terms of collection, definitely it will reduce the fraud. But I think we should be focused on the employee education. Thank you.
Thank you, Kuldeep ji. A very important point you've raised on training. And I guess that's the need of the hour now, to make the systems even stronger through training. Can I now invite Sharmila to come in? I think she has to leave a little early. So Sharmila Kunguma is the Chief Risk Officer at Spandana Spurti. And I think she's got a background in internal audit and fraud management. And I think can share a lot of her innovative, fresh ideas for the sector.
Hi, Sumesh. Thank you so much. And thank you, Sa-Dhan team, for inviting me and giving me this opportunity. And good afternoon, everybody. While I heard Mr. Kuldeep, Sadaf, and Mr. Nanaya speak exuberantly about what all can be done from a fraud mitigant perspective, but I have a few. See, when as you told me that like we have experience in internal audit and fraud risk management. When we did a root cause analysis of all the frauds that are happening, why are these frauds happening? When we do a deep dive, the only thing that we understand is there's lack of monitoring that happens. For example, Mr. Kuldeep very rightly said that all the write-off accounts are being fetched by the fraudulent staffs, and they collect money from that. But once, how does for example, of what happened in the pandemic? See, customers moved out, they migrated to a different location because of pandemic. But after few days or few months, they came back to the base location of their work. But none of the supervisory staffs, like a cluster manager or an AVP or a VP, would do a monitoring activity as to what is the demand today and why is it not being collected. And also, if you look at it, it's always the easy thing that is being adopted at a supervisory level. If I would say any supervisor who is going for a collection review as to why money this is not collected, so he would only look at it like, okay, which is an easy bucket for me to collect and close with my numbers for the day. It will be like I go for a 30 day or a 60-day or a 90-day bucket rather than go further than 90 days. So the past 90 days are the areas where the collection officers get an opportunity to do fraud. And I somehow feel that lack of supervision always gives an opportunity to make fraud, because when you know that you will not be supervised, you will not be caught, and we're all looking at officers whose salary is between 18 to 20,000 and handling cash of lakhs together. So I always feel that lack of supervision is a big catch for us. And along with that, see, there is though we say that we have to do job rotation of the officers, are we doing it on a rigorous basis? No, we are not giving a job rotation on a rigorous basis, because we always said that COVID happened, because of that we don't want to move one officer from one location to other location. But at the same time, when we are not moving him, it was good enough that we didn't move him till 2021 financial year, or past the first and second quarter of 22. But at least now we should start moving them, because they are used to the customers and they all know that which customers they have done fraud with and how to handle it. And also, when even the supervisors visit the field, they always visit with the officer who has done fraud or the branch manager. They don't do an independent visit. So with this, what happens is, when they don't do independent visits, so if I am a fraud, if I have done fraud, then I know where I have done fraud. So automatically, I will not take my supervisor to the place where I have done fraud. So independent visits and more of supervisory control is required. That is on a manual perspective. But at the same time, digital is definitely required. Now, ICICI Bank has a digital SMS facility where they send a link to the customers, and customers, you can click the link and make the payment. So in that case, what happens? The payment directly comes to the bank. So these are the options that we'll have to see. Now we have all moved from the non-digital era to the digital era. So the more we are digital, and none of our, now I don't think we will have customers who will not have a phone. Most of our customers, at least there is one phone in a family. And it's always easy to make digital payments and account it, reconcile it. And along with the other challenge that we are facing, and which actually gives room to fraud, is the contact number of customers. The contact number of the customers in a MFI industry, which is right, will not be more than 50%. I'd be happy even if it is 50%, because somewhere or the other, it is one of the group members now contact number, and sometimes even if employee also gives his own contact number, and the contact number itself is not right. How do you reach the customer to know if she has made the payment or she has not made the payment? And not only that, the dependency on the employee who has done the sourcing or collection is high, because supposing just imagine there are 3-4 employees of the same branch leave the organization on the same day. Then how do you know who is the customer, where is the customer? It becomes very difficult for us to identify the customer. So with all these things, I would want to close my speech here. And one more point I would like to add is with respect to collection. Like I was talking about employee fraud, there are also with respect to the cash snatching that happens. So cash snatching happens when the employee goes from one location to other, which is far off. And we will have to look at that also, because there are other mitigant measures where we can look at depositing cash in nearby branches, talk to the branches, increase their cash deposit limits, have a conversation with them, get the branch deposit limits increased. And also we will have to look at options where, each officer has been properly assigned the areas that they are supposed to visit. By doing all this, I think somewhere or other we can have some kind of control, because instead of looking at detective control, it will be better for us to look at preventive controls. And thank you all.
Thank you, Sharmila, for these some very practical advice and solutions you mentioned, which may be written somewhere but not being followed. You talked about job rotation, independent visits, and your ideas on digital verification and better cash management systems. So we'll definitely take that into account. Thanks for that. So I'd like to now call Anup, who's risk head at Annapurna, and I think they've have fairly robust risk management systems, a lot of focus on data analysis. So and also I think a data sharing platform. So if Anup could come in and share some of the work that they've been doing.
Thank you, Somesh, and thank you, Sa-Dhan, for this organizing this event and calling me as a speaker. Well, my co-speakers has talked about the major risk even which we face when it comes to fraud risk, and some of the control measures which everyone has in place. But I've since to avoid the repetition, I'm not going to talk about the risk events here. Well, first thing I just want to start with is there are some realities, and these realities should be we should understand, we should accept those realities. One reality, we'll deal with clients who are who lack financial literacy most of the cases. We deal with clients who lack technological literacy. So these are facts. Secondly, we deal in an environment or ecosystem which has a limitation in terms of data, alternate data. And the last one, obviously the business takes the front seat, and obviously we as a risk manager, we have some of our limitations as such. So there is no denial of the fact that it's impossible to completely eradicate the fraud risk. So there will always be fraud, that whether we move from 100% cashless disbursement, 100% cashless collection, whatever is the case, we digitize the whole underwriting process, we bring in AI ML models, fraud will happen for sure. But what we need to focus on is how to limit the impact of fraud. So I was just going through some of the reason, this agent-based fraud pattern. So when I talk about the agent-based fraud, I meant the commission agent-based or even the non-pipelining. The example which your team was also focusing on, the case which happened in the state of Bihar, wherein the impact was around 100 to 150 crores. So this particular scheme went on for months and months. And it's not just a single case. I can show you examples of Korba, Ambikapur from Chhattisgarh, Halol from Gujarat, or Agartala from Tripura, or even recently the Shadol incident from MP. So the typical impact on the whole industry was from 10 crores to 20 crores, 25 crores. And it's not just limited to the financial impact. It was the reputational damage that followed those incidents. When this Korba incident happened 2 years before, we all remember across our branches there were raids by police officers in the middle of nights. I had around 4 or 5 area managers of mine sitting in the police station for, throughout the night. Similarly in Shadol, when the Shadol incident happened during this COVID first wave, we all faced the raids for continuous 3 or 4 days. So my only concern here is, why do we need to wait for this 10 or 20 crores of fraud to happen? What if we can establish a bureau? What if we can establish a system of sharing information? We all have succeeded in developing custom bureaus for microfinance. I mean, we started in an era where there was no credit history available at all, and considering the kind of clientele we have succeeded in developing a well-established bureau. And to be frank, I can easily state this in front of all the participants that the microfinance bureau has a lot more data or agile data than the other bureaus. So considering our history, can't we establish such a data sharing platform? Herein, I would like to congratulate and thank Equifax team for putting a lot of effort in bringing this data platform. Sadaf did also mention about this point. What we really need is a robust data sharing platforms, sharing of informations. As a risk head, my only need is I need a risk registry. See, obviously, it's not possible for us to list out all the exhaust list of risk events. What we need is a dynamic table of information wherein all the risk events are placed, so that as a risk head or as a CRO, we as a control manager, we can go through those newly arising risk events, and we can modify our systems to stop, at least control those risk events. So my only concern or my only suggestion to the whole audience is, let's not wait for that 100 crore, 20 crore fraud to happen for the whole industry. Let us volunteer ourselves, in telling the others that, okay, I have happened to had a fraud of 10 lakh rupees. At least you be aware of this particular incident, and let's limit our exposure in that sense. So that's the major point which I wanted to talk about. And secondly, it's just an observation. Well, once the demon came in, we all moved from cash disbursement to 100% cashless disbursement. Now we are all thriving for 100% cashless collections. But somewhere, are we missing out the fact that are we asking this question whether our clients are ready enough to move towards this change? My question is not to delay this digitization of processes. My question is not about that. My question is, while we are moving towards digitizing the process, let us bring our clients together. Let's have a well-established training framework to educate the clientele, and therein the SROs can also bring put in their efforts. Because now what's happening is, whether it's CGT or CRT, obviously each and every company has their own systems, because what they need to do is they need to train the clients on their processes. But my suggestion is, when it comes to digital related frauds and possible digital frauds in the future, as SROs, we can, as SROs, Sa-Dhan and MFin can bring in effort to bring in some well-established modules, training modules that should be trained during the GRT and CGT. These are the measures which we should come up with. And the first point, which I stick to that, it's very difficult to avoid fraud to happen. What we can do is limit the exposures. So, thank you.
Thank you, Anup. Thank you for your nice ideas. And yes, so it's the right time you're asking this, because the platform is going to be launched. So hopefully there'll be much more of the data sharing that you were talking about. And hopefully you use the word dynamic. Hopefully this will be a dynamic system that can help all practitioners to change their systems in time, to look at new kinds of fraud coming in and limit the damage. As you said, you can't completely do away with it, but we can limit it. So thanks for that. So can I call now Naveen Kumar Malik, who's CEO at IIFL Samastha, which is one of the fastest growing microfinance institutions, and I think have demonstrated a lot of innovative technology solutions in their operations. So Naveen, over to you.
Yeah, thanks, Somesh, for inviting me and giving me opportunity to share my experience as well as Samastha experience, how we are dealing with this kind of situation. Okay, and thanks to all the previous speaker for enlightening us with their experiences on this important topic for the industry. Okay, so I will talk about this fraud. We can divide it into two era, because if you see demonetization time, where most of the industry player has gone for digital disbursement, and before that it was mostly on the physical. So on the physical disbursement time, the fraud were, or incidence of fraud or the type of fraud were very limited, just like ghost loan, portion of loan used by our staff, or involvement of commission agent, staff taking commission, and some part of that will go on the insurance side, so insurance amount settled but not given to the customers, and few incidences on collection side where it's like collection amount has been collected from the customer but not deposited to the organization. But after this demonetization time, when most of the industry player has gone through the diverted to the digital disbursement, so disbursement side, these kind of fraud has gone down, but it has taken a different shape. So I will be coming in how it has taken a different shape and how it is started mushrooming in a different type of fraud in terms of disbursement when we are doing the digital disbursement. And if you see collection also, now we have gone partially digital and mostly physical. Okay, so in the collection side, we can say we are a phygital, not a completely physical collection and not completely digital. So when industry is moving into the from physical to digital, and disbursement has already moved, so our training for the, as rightly told by Kuldeep sir, training is an important aspect where industry should be focusing. Apart from this, there are two important things which can give a control to the industry in terms of controlling the fraud. One is the monitoring, and second part is technology, apart from the training. Okay, so now if we take the collection where industry is moving towards the digital collection. So if we take Samasta as an example, how we are moving towards the digital collection. So our first goal was how to remove the cash from the branch. So disbursement is already moved. How we can not get the collection money at the branch, and how we can dispose it before it reaches to the branch. The second step is how we are going to reduce the cash from our staff hand. Okay, so in these two aspects, we have taken multiple steps towards that, and in that we have got a tie-up with different BC vendors, where even after banking hours, if we are getting the collection, we can go and deposit to their BC points, which generally opens in the evening also. So that our cash at branch is getting reduced. So that part we have almost 80-90% we are able to successfully reduce the cash at branch. Now reducing the cash at CRO's hand. So there are two ways to do it, because till the time cash is in the hands of staff, there is a chances of fraud. So as there is a chances of risk of life also if they are carrying the cash, which Sarmila was mentioning, that cash in transit. So we have tie-up with different vendors who have the BC point at different location, where staff can collect the money from the center, and with the nearest BC point they can go and deposit. Okay, we are also exploring an opportunity where just like if you observe the operation, microfinance operation in UP and certain part of Bihar, and few of the organizations do across the country also, they collect the cash in the center meeting, they give it to one of the member, and that member comes to a branch to deposit. So we thought coming to a branch for a customer would be a little difficult. So why can't we go for a BC point, and we introduce some technology? We do some technological intervention at that level, where we can generate a token in the system, so that whatever cash we have handed over, till the time it reaches to BC point and it's coming to our system, it can be tracked. So those kind of things also we have done. And then it's not that we have like implemented all the things at all the places, but pilot is going on for different things. So CRO going, like our loan officer going to deposit the BC point, and customer is also is supposed to go to the BC point. So customer version is yet to like do the pilot. Technological development we have done so far. So what my point was that till the time we are not reaching to that level of like strong monitoring, strong tracking of the system, fraud is like inevitable to avoid. Now, if you see, compare the previous COVID period and after COVID period, there is one important factor comes here is uncertainty of collection, because earlier 99% or 99.5% above collection percentage was having for most of the industry players. So 0.5% irregular collection is what easy to monitor. When we went into COVID, so a huge percentage of the collection was uncertain. So there if there is an uncertainty in the collection, there is a high chance of fraud over there, because monitoring of that volume of uncertainty of collection was difficult. So there also we implemented few of the not technological intervention, but few of the local intelligence, how to get informed that this much amount has been collected in the field and whether it is reaching to the branch or not. And apart from that, some telecallings to the customers, to the centers, whatever amount they have deposited. So those kind of things we have implemented so that the quantum of fraud can be reduced, and we were able to reduce also to a large extent of the fraud. Now, what I was telling in the beginning, disbursement which has gone digital, there also few of the frauds are mushrooming in few of the pockets. What we observed, and then we have done also to address those things, we have done the little bit changes in our technology. So the new fraud was coming as all the industry knows that all the disbursement is going digitally in the customer's account. So what we found in few of the pockets, not in a very big way, but in a smaller way, was they were creating the fake bank account with the help of BC points. It's there are so many banks who have a BC point who do this bank account opening kind of thing for the banks. So there they opened the bank accounts on the name of the similar to the KYC name, and there the money got transferred, because we had a process of Benny validation where we check all the customers' bank account name is matching with the KYC name or not. So they have created the same bank account with the same name, and the fund got transferred. So we found it at a very early stage, and then we have introduced few of the touch points. This happened only for the new customers. So for the new customer, we had certain system in place, but that was not mandatory. So we made it mandatory, just like CPV, where this location should be captured, and just like some validation in the login device and mobile number, so that no password can be used by other person with their other device. So those kind of things we implemented, and then we were able to control those things. Now the next challenge which we are expecting and we are working on that is, suppose if we are moving to the digital collection. So one mode of digital collection will not fit at all the locations because of different geographical challenges and different challenges with the available vendors in those geography. So earlier the collection was coming, all the collection was coming in a cash to branch. So it was easy for a branch manager or a cashier in the branch to tally the cash, reconcile the cash, and get it accounted, and then control the fraud. Now the cash will come to the system in a different way, and there is a time lag of those cash, because BC points is not as versatile as bank, where we can, if we deposit in an ATM cash of 10,000 rupees, and it reflects immediately in the account. So that kind of things is not, that system is not so versatile. It will take some time to get so versatility, so that API integration will give the right information to the system itself. So till the time the digital and physical is mixed, so our monitoring system, our reconciliation system should also be physical. Some portion of digital and some portion of means like physical, means like reconciliation method, monitoring methodology is required to get means like control of these kind of frauds, because the staff are smart, and if the cash is in their hand, they will be able to find the loopholes in the system to commit a fraud, and that will damage the organization as well as the industry and even the customer records. Okay, so we also need to have a means like versatility in our monitoring mechanism, in our reconciliation mechanism, which will give a means like boost to means like control for the organization, as well as reduce the incident of frauds in the means like field. So I will be eager to listen from other participants if they want to share anything, and if so, that's all from my side. Thank you.
Thank you, Naveen. Some very good solution that you've talked about, which is not just technology, but also you talked about monitoring through other market intelligence, that you're able to detect these things happening. So mix, I guess what you said about versatility and being flexible is how to really crack it and to be one step ahead. So thanks for these ideas on reducing cash at all levels, and hopefully others can also follow. Great. So like to call Sucharita now from Equifax. She's the product lead on fraud and ID. So what Mr. Nanai was saying at the very beginning, I think she will now make a presentation on the known fraud exchange. So Sucharita, do you want a screen share, or do you want us to do that?
Hi, good afternoon, everyone. Am I audible?
Yes, you are.
Okay, great. I'll share the screen.
Okay.
Hope the screen is visible to everyone.
Yes, it is.
All right. All right, great. So hello again, everyone. First of all, thank you very much for taking the time out for this session today, and especially to Sa-Dhan for organizing this wonderful engagement. Mr. Nanaya has already opened the discussion where he's talked about the great learning sessions we've had in the past several months with Sa-Dhan and with some of the lenders, where we've brainstormed on how we can understand what are the specific challenges of the sector and what could be a possible solution that could come across. I'm here to talk to you about that solution called Luminate Exchange. This is our latest offering in the direction of fraud risk management. And in the session today, I'll be covering a few things, starting with the overview and our global footprint in this domain, moving on to the key features, benefits for you, how it will work for you, and what are the major fraud definitions that we've envisaged to be part of this exchange. So with that, just before I start talking about the exchange, I'll just try to re-quote something that we all heard during the panel, and that was the dominant thought that came out was, how do we control the fraud? And Mr. Sadaf also mentioned that the best way to controlling fraud would be by the use of preventive measures, because everything else that you do later on becomes detective. And while detective is very important from you're improving your processes from a macro point of view, how do you stop customer fraud, which happens at a very micro level when he's coming to you for the first time or second time to apply for a loan? That's where Luminate Exchange can be of benefit to you, because it'll help you to detect that level of fraud and stop you from going ahead and disbursing the loan if you feel there is some degree of suspicion in that particular profile. In terms of the three boxes that you see here, the first one is something that we've all heard about. And the key thing here is Equifax is going to be looking to build this exchange for you, host it, and maintain it over a period of time. So from your side, it is more about just doing that one level of integration, and you'd be ready to use the data over here. So all that work has already begun in the past few months where we have engaged, we have understood what needs to be done. And now we are in the stage where we can go ahead and start building this up. The members will need to come together as a consortium. And why as a consortium? Because we are building it specific to the microfinance industry challenges. So the kind of data fields that we have envisaged as part of the exchange, the fraud definitions, the logics, all of them have been attuned to what we've heard the lenders speak over the last few months. And hence, when you give data to us, the data that you've been today keeping with you would all be in different formats. The moment we come under one umbrella and start submitting the data, just like you've seen on the credit bureau side, it becomes usable by everyone and everyone understands it in the same way. So that's to bring in the uniformity of the fraud data that we are all having individually. We've also heard Mr. Anup talk about how building the credit bureau for MFIs over the past few years has greatly benefited the industry. And it all started from a clean slate. And we're at the same stage today for the fraud exchange as well, where we're trying to customize something for you. And the more you contribute to this exchange in terms of your historical fraud data, your incremental frauds that you come across as you go live on the exchange, the more do you stand to benefit from this particular model. Because the more the great data grows, you will be able to get that much of output from it. In terms of usage, of course, it's a new sourcing app. Use case, but you can definitely use this for repeat loans, which happen in the same loan cycle ID, for top-ups, for cross-sell, for upsell. For all of those purposes, this particular exchange can be used. And historical data contribution is something that we look forward to when you subscribe to this particular exchange. That is the only eligibility criteria that we have. And going forward, once you go live, you can start inquiring on a real-time basis, just like on the credit bureau side. While we have seen on what the overview of the solution looks like, how have we reached this stage? So we've reached here over the last 10 years globally. We've been building and managing fraud exchanges across the world, starting with Canada, which is our oldest exchange. We have a microcredit exchange in Spain, which is similar to the microfinance exchange we're building. So we've taken a lot of good practices from our global counterparts while putting this up. And we've had multiple rounds of discussions with the local teams to see how we can customize it, because the variety of information that microfinance has may be a little different from the other sectors. Looking at the client base, there's a long list of clients. We have some 35 plus clients already in Canada. And that talks about only one of the exchanges. Though in India, when we have launched this last year, we've already got clients under the FACE, which is the FinTech Association, for the first consortium, which is our retail consortium that Mr. Nanaya spoke about. So we've already started the journey in India, starting with retail, now moving to microfinance, which is our core focus. And this focus is something that benefits the entire industry, because it helps you not only to streamline your own data, which is fragmented across teams, across regions, but it also helps you to catch more frauds using the community data that will come in through this exercise by everyone pulling in their frauds. Going forward, if there is a possibility of cross-leveraging the microfinance data and the retail consortium data, then you can also take advantage of a cross-community database, which can be as a future roadmap for this particular exchange. The next bit is in terms of the process efficiencies that will come in, because obviously you don't need to build something from scratch. Equifax will do all the heavy lifting and designing and creating of all the APIs, etc., that you need to just integrate with, and you're good to go to start using it. So your teams can internally implement faster and also have a better bandwidth to focus on the more important activities and on the happy customers that you have. In terms of your risk management, that's the third point over here, which talks about how you can minimize fraud losses. That's a given from the exchange, but also how you can focus your investigations, which can be on the suspect cases that come out of the fraud report that we share with you. So instead of doing investigation on a large pool, you can focus it better. And in terms of a reputational risk, that is also something that you can really look at addressing, because that's something being talked about in a lot of the different circles in the microfinance sector. So overall, it's going to benefit the industry in terms of sharing data, and how Equifax, on top of all of this, is able to add more value to the data sharing is by making sure that you submit confirmed frauds into the exchange. So we have defined under what categories can you submit fraud. And for each of the categories, we've also defined maybe what documents can be checked to ascertain that the fraud that you're submitting has been cross-checked internally. So either you do it through a maker-checker concept, or you do it any other internal mechanism, and you confirm it before you're submitting the data into this. The second thing that is there is, it is an exclusive database for the MFI members. So this exclusive database is not only about the base data coming in, but also the custom fields that have been created. For example, we heard about specific fraud types in the previous panel, things like external agents, ringleaders, then employee frauds. A lot of these things also came up during the brainstorming discussions. What additionally came up is risk of negative geographies as well. So you will see how in the next few slides we have covered all of that and customized it for the segment. On the credit bureau side, you are very accustomed to pulling data on a real-time basis, and you will enjoy the same kind of experience on the fraud bureau also, where the data pulling is real-time, but you will also additionally have a real-time data submission option, which will allow you to frequently submit data during the same day multiple times, as many times as you wish to. Now, how this is important is, in today's times, we see certain number of fraudsters, especially it happens in your syndicate frauds, where they try to max out the PII information of a particular profile by applying to multiple institutions around the same time window. Because you will, if one lender is able to identify the fraudulent nature of these kind of transactions and is able to report it into the fraud exchange, because the submission does not happen with a lag, within that same time window in which the fraudster is operating, the rest of the members will also be standing to benefit, because the data has now come in from one member. And when the rest of the members inquire against that particular profile on the Equifax Fraud Exchange, we will give out the tagging against that particular profile, saying that this looks confirmed or a suspicious case. In which case, then you can exercise additional controls before disbursing the loan. So that is how real-time data submission is very crucial. Of course, we will have the batch process as well for the ones who want to opt for the batch process, but this is an additional benefit that members would have as part of it. The data that members submit to us, while that will be generally uniform, what they submit to us, when they get back the output from there, it will have two things. One, there will be a rule engine sitting on top of it, which will do the entire data matching processing and giving you a confirmation that whether this particular profile has matched on the bureau or not. And if it has matched, what are the details of the case in the bureau. So if Sucharita's name is in your application file and Sucharita's name is also on the fraud exchange, then in the output, you will get the entire case history of Sucharita that has been submitted into the exchange, talking about the address, contact details, even talking about the type of fraud done, when it was done. All of that will come to you so that you can take a proper decision on that case. Further, apart from this case detail, we will also add a severity tag. How we do this is on the basis of the degree of match that the particular application data has with the fraud data. So depending on number of rules that we have adopted at our end, we will be able to tell you how suspicious or how fraudulent is this particular profile looking like. So that is the second level benefit of the rule engine. The last few things that you see here are more on the technology and the best practices that we have adopted. So global best practices we have already mentioned, but the fact that we've built it on the Google Cloud platform, the solution is extremely scalable. And anytime anyone wants to, go up inquire more with us, we are in a position to support that for you. The other thing that the solution enables is most of the integrations that you have to do are API based. So while the batch method is available, the API integrations help you to real-time quickly decision your accounts, and also in terms of reporting fraud data, that is important.
Sorry, just we're trying to mute that. Just a minute.
Sure.
Give me name on this person. Yeah.
Thank you.
Sorry, carry on, please.
Sure, thank you so much. The last bit here is more of a future roadmap where all of you all are aware of the Equifax Employment Exchange, where most of the staff-related frauds that you all mentioned are going in. We may look at potentially leveraging the fraud exchange, which is Luminate, along with the employment exchange going forward. So you get a more holistic view of the particular profile. So those were the key features of Luminate Exchange, and briefly telling you about how this works. I'll just touch upon a few key things here is when you send the inquiry to Equifax, we will match the data on two counts. One is the legacy fraud data that you share with us one time before you go live on this exchange, plus any other incremental frauds that you share with us on a real-time or a batch mode after going live. That will be the complete database on which the search and match will be done. The matched entries will be shared with the member, where the member is going to be investigating the output and taking a decision on what is to be done. For the cases where you are going ahead, disbursing a customer, and then retrospectively finding out that, okay, this customer has not paid me, maybe it was a fraud, you can later on also come back and report that customer as part of the incremental fraud data to us. And apart from the fraud data that you submit to us, one thing before that submission which needs to be checked are the fraud definitions. That is, under which category do I submit this information? Now, when we discussed with all the lenders, we realized that most of the frauds are falling under these 4 categories, and these are frauds which are happening from your loan section. So to say, any borrower related fraud which you want to submit into the bureau, with respect to that, you can submit this information. The exchange is in the first phase only restricted to the borrowers or loan applicants who are on your books, and not to external agents. But if any of your borrower in the past has now become a ringleader or an external agent, then you can submit that information also to us. So now looking at the 4 categories, the first one is the document and identity fraud. This is one section where a large chunk of your borrowers may fall. Now the document fraud is first party fraud, where I am doing a fraud in my own name, giving my own information. So for example, if you receive a voter ID with fudged information, you can report it under this category, and then the fraud evidence in that case will be a voter ID. So we have a method of capturing the document type also along with the fraud type in the exchange. So that provision has been made. The next category, the next subtype under this category is identity fraud, where I am doing a fraud in a third party person's name, where I become a perpetrator and the other third party becomes a victim. And without the knowledge or authorization from such victim, I'm using his personal information to apply for a loan. Now, most of the cases come in these 2 categories. And if you feel that any category out of the remaining 3 that we discussed today, if you feel there could be a 5th category apart from these 4, then also please bring it to our notice, because then we can think of how best to incorporate it in this particular scope. Because when we were discussing the loan sharing category, for example, we realized that, okay, post-disbursal diversion of funds is important. But there was also a loan pipelining issue which came up, which we decided, okay, while it is a related category, let's put it under loan sharing so that members can submit data and not lose out any of the fraud cases just because the category is missing from here. And how this can be evidenced is by from when you do your internal audit. So from those reports or your field investigation reports, all of these things can be investigated, and they can be like, when you have the record, you can submit the data to us. The third category here is on address instability. What this tells us is, look, if a borrower is constantly changing his address, and specifically his permanent address, then he falls under this category, because it shows that he is probably moving from one area to another area, which is not a very unlikely situation for microfinance where it comes to the current address, but permanent address shifting could be an area of concern. And hence we have put in a logic which captures both the frequency and the tenure during which such kind of a shift is seen, so that we don't penalize any genuine cases. The last category that you see here is negative location, where you may not pinpoint this to a particular borrower when you are giving a loan, but if certain pockets are showing you a high degree of fraud, or you're seeing thefts or anything like collection thefts, it can be anything that's happening in a particular route, and you want to submit that as a risky location or a negative location, those are the cases where you can definitely submit under this category. So with this, we are to the end of today's discussion on Luminate Exchange, and I thank all of you for patiently hearing me out. Thank you so much.
Thank you so much, Sucharita. That's a very nice presentation, and a lot of hard work seems to have gone in. It's very comprehensive and robust. And I think things like this, your real-time information and the cross-leveraging and this identifying by severity and all are really quite innovative. I now hope that all our members will start to use this soon, and I think it's the need of the hour. So thank you for that. I think we can just throw it open to some question answers. I'm sure there will be questions on this platform as well, but they can also be questions from participants on for the speakers. Sadaf has left, but you could still put it here. So one way to do it, yeah, raise your hand, or you could also put on the chat group. And I request Souvik to just help with this question answer session now. Thank you. Souvik?
Yeah, thank you, sir. Thank you, everyone, for sharing your input, thought process, and all. So, Mr. S. Vineet, he has raised his hand. Mr. Vineet, if you have.
Hi, everyone. This is Shubham. I'm heading business in Aditya Microfinance. My question with Sucharita, how is it different from radar? The concept looks so similar. How is it different?
Good question. Thanks for asking that. Firstly, to do justice to that question, I don't know exactly how radar is in terms of all the specifications, but on a concept level, let me try to answer that. So radar is by MFIN, right? It's a within the industry initiative where they're looking to share data. Luminate Exchange is by Equifax, where we are trying to leverage upon all our expertise into data management, into hosting such exchanges. Equifax has 4 exchanges today in India. This is going to be our 5th exchange. So not only do we have experience in hosting this kind of data, maintaining this kind of an exchange, but also the point that we have a global expertise in managing a fraud exchange, where we have brought in concepts like the rule engine, real-time submission of data, then custom groups where we take in only fields that the MFI lenders have told us to incorporate, the fraud definitions that we work jointly together on. So those are the ways where we look at as the phase 1. And the future roadmap of this would be to add more capabilities to this, like the employment exchange that we spoke about. That could be one capability we could leverage on. We could look at combining this with our credit bureau. That is the second capability we could think of doing. Then the third could be any of the, going forward, if you come across all of the digital cyber frauds that you've spoken about, if there is a way for us to incorporate any of those checks, because we have acquired a company globally called Count, which is into digital fraud prevention. And they have a global database that we can also start leveraging on from next year. So there are multiple, it's a blank canvas for us right now, and there are multiple leverages possible for us to do, which I mean, in my limited opinion, I don't think Radar will be able to cross leverage such options as we can as a credit bureau.
So continuity with this reply. So suppose I being an entity uploading my data, so I'll be uploading for all my frauds internally happen. So
Right.
that cannot be validated with the other entities, unlike Radar.
So let me try and answer. And so one of the important differences between Radar and this would be, look, so assuming that members report the same data to us and to Radar also, the base data could be same, right? Now you may be searching in the Radar database right now using one or two key parameters, as in so identifiers like a voter ID or an Aadhaar number, and an exact match would be returned back to you. But as you would have seen and we've experienced in the bureau database, right? The data is there. How do you find when there is only some? And so the fraudster is not going to do a fraud with exactly the same details next time around. They will change some details, and you may not find an exact match when you do a sort of a VLOOKUP or kind of a query, right? Which is based on an exact match. So that is an important, and the algorithm to match, search, and then match the customers, which is what our base capability is on the credit bureau, is an important one, which will distinguish the success of any such database being, and so success in the terms of usefulness to the end users. Even and so if you have a suboptimal search and match logic, even though you have the same baseline data, underlying data, the outputs would not be as robust or as useful. So that's the biggest difference I can see, and between a Radar and fraud exchange as Luminate one.
I hope, Vineet, your question is answered.
Vinita, also in addition to what Sucharita and Anshul said, this would be a real-time check. So API-enabled connection, so it will be a real-time check happening. Obviously, our base data would be a much larger across industry sections. So if there are any fraud risk emerging from a different section, that will also potentially get identified. So this is an industry-wide, kind of initiative, and this is a platform-led. I think exactly what Anshul was talking about in terms of search match, ability to respond to a query, I think is a lot more powerful on a platform as compared to maintaining different sets of information. So that would be different. I don't know, Vinit, how is Radar getting used at the moment? It is, you send a batch data or you ping every time and you get response? Is it batch wise, or how does it work?
No, data gets validated at district meeting. So authenticity of data becomes more important and accurate, because all the players in the district match it and vet it. So the genuinity of data is more.
Where we see Radar is maybe we could we will talk to MFin to see if we are able to access also,
because sir, as this is a great initiative, I must appreciate it. So if something comes with both SROs coming together and brainstorming, then it would be a beneficial product for the industry. Else it would be in a kind of niche product, and one is using, one is not using, like employee bureau. Still, it's not in full functionality. So just a suggestion. Thank you.
Certainly, absolutely. certainly the point is not competing, it's complementary, right? So we could bring it together to make it even more powerful from a fraud risk standpoint.
Thank you. So we have a question. I think whether who's going to answer it, whether existing regulation permits sharing of customer data, even in case of fraud with any other commercial company. Mr. Dheeraj Jha, he raised this question. So, is there any regulatory, regulatory bounding for anything to share data?
No, so as we've seen the regulation, there is nothing which stops lenders from sharing this information to the credit bureau. Now, and at the same time, there isn't any mandate also from the regulator that this needs to be shared. So, unlike in the retail bureau, right, or retail or the microfinance credit bureau, credit risk bureau, there is a mandate by the regulator that the data needs to be shared on a regular basis. There isn't any such mandate, but at the same time, there is no such rule or mandate that stops lenders from sharing such information.
Okay, thanks, Anshul. Thanks for answering this question. So, any other questions? Anyone? You can raise your hands or simply come forward and ask question. Yeah, Shrikant. Shrikant from Pahal, I think. Please, Mr. Shrikant, ask your question.
Shrikant, you're on mute. Please, can you unmute?
Yeah, sure. Yeah, am I audible now?
Yeah.
Yeah. Mr. Chandra, one question on Luminate. Say for an example, if multiple organizations are using this software, the API one, and if one organization has declined some customer's profile due to some, say, fake KYC or something like that, then how will the other organization person who is working on this, what's Luminate, will come to know that what is the specific reason for the decline of that particular customer in the previous organization or in the other organization where he has already applied or she has already applied?
Right. Thanks for the question. What you're essentially asking is if there has been a confirmed fraud by one of the members and he has submitted in the exchange, then how would another member come to know about it, right?
Exactly.
So this is the reason why we request members to place the fraud check right at the beginning of the funnel, where before doing any other check, we first inquire on the exchange and find out whether this particular profile has been submitted by any other member or not. So when we return a response on that, we will tell you whether there is a match or not, and also what is the extent of the match. So for example, what is the full case detail of that person? Say Sucharita is in your application form and Sucharita is on the exchange, you will get my full details, which will include the type of fraud I have been identified for by the previous organization, previous lender. Okay, and not only the type of fraud. So like the identity example I was giving, the document and identity theft fraud example, where my, say, voter card has been fudged and submitted for a loan application. So in the report, you will get Sucharita matched, plus the type of fraud will be document and identity fraud, plus which document, which is a voter ID. And in case any member has also submitted the details of the voter ID, like the voter ID number, etc., that will also come to you in the output. So this entire detailed information will help you profile the candidate better.
Fine. Thanks a lot.
Thank you.
Thank you, both of you, Shrikant and Sucharita. So, any more questions? Yeah, I think two people have raised this. Ajay from Shamshati.
Yeah. Hi. Thank you. So, this question is more for the Equifax team. Where will you can see the in the microfinance industry, many a times the product suitability or mis-selling or bundling is an issue as well when we are working with our agents or these ringleaders. In which bucket will these kind of frauds go into the Equifax data? Because I was thinking hard to put it in one of those buckets which you showed, Suchitra, but couldn't identify it.
Right. So I think mis-selling is, so So let me put it in a different way. What we've tried to do as part of this is help you identify the frauds because of which you're incurring losses or a reputational risk. Mis-selling could be one for reputational risk for sure, but it is not so much from a customer side. And this is entirely, it's from a customer, oriented fraud. So if you feel that there could be another category where you would want to include that, we could, but you would need to put it under a particular customer name, like a borrower name, and then tag it as a mis-selling, subtype under the fraud definitions. That is possible. So, because like I mentioned, it's a blank canvas and we've started charting out our journey here. If you feel we want to add categories to fraud definition, we're absolutely open to do that. So.
But just to make it clear, right now the understanding is to like more think from the institution side. What are the different frauds happening, and then how can institute can get these validated and avoid those, rather than, so these frauds are, maybe they will eventually help the customer as well, but right now the centricity is kept at the organization but not at the customer. Is it right to say?
Yeah, I would say the centricity is more on the customer to see what kind of frauds are originating from the customers or from external agents which are impacting the lenders. Yeah, that would be a better way of putting this. Because all we are trying to do as part of this exercise is mainly to protect the lenders from falling prey to these kind of customers or external agents. But also as a second leg, because we are capturing whether a customer is actually a fraud perpetrator or a victim. So in some case, we are also trying to protect genuine customers who are falling victim so that they don't get penalized unnecessarily. So the focus here is more to safeguard the lender and eventually the customer.
Okay, makes sense.
And the example that you were giving, we would, and in the discussions that we've had till now, and correct me, Sucharita, but we haven't, this hasn't brought to our notice that we need to consider. So as Sucharita earlier mentioned, we'll be happy to discuss further this as well as any other idea about what else can be a fraud category, which we need to include in the submissions or in the database. So, and customer centricity, eventually, while we're trying to help the lender, eventually it's the customers who finally, right, who are being helped by this feature, right? Because the customer, we're trying to see, as in, so if it's an impersonation, right? We're trying to see, help stop that impersonation for that customer.
Yeah, no, indeed, and Anshul, that's the right way to say. But I think, like, maybe when you think more around the customer perspective as well, I think there are, I don't know, like maybe a couple of more feedback points may come in new verticals or new domains that you guys mentioned in the PowerPoint may evolve. So yeah, maybe it's a good starting point, but I think thinking from the customer point of view will also help, because given the digitalization, many of these frauds actually exist on just on their side as well.
Sure. So we'll be happy to connect with you and others for any such ideas about how we can enhance the current solution.
One suggestion in this thing, we can also, hello, this is Shrikant here.
Yes, Shrikant, please go on.
Yeah, one suggestion is regarding this thing. If we add a category regarding the internal employee conducting a fraud in it, it could be helpful for the HR team also, and in the internal audit team also, to check whether the employee which they are hiring has done any mischief with the previous organization or not. So these all things, if the gentleman rightly said, if a employee has committed some misappropriation or say misleading sales in his previous organization, and if he's trying to join some other organization, we could easily check in that experience tab or something like that, and identify whether he has done something fishy with the previous organization or not. So that could be possibly done.
And this is the premise, or this is the functionality of the employment exchange, which is already live. Some of you are already members and submitting data on that. So if you could start using that for submitting any such frauds that the employees have committed while they're leaving. Or maybe you fired them or they left and you figured out later. So all of this could be updated to the employment exchange, and your HR teams can do a query on the employment exchange to figure out the background of that new hire.
Yeah.
Okay. So someone from SRFS?
Yes.
But your voice is very weak. We couldn't hear you.
Hello.
Okay. Yeah.
Hello. Are you able to hear me?
Yes, sir. Yes.
My question is there any analysis of frauds, nature of frauds done by the office staff, outsiders, ringleaders and borrowers? Is there any analysis made in that way? Who are contributing more for the frauds? Whether our own staff, or borrowers, or ringleaders who are commonly engaged in doing this kind of frauds? Is there any analysis? I request Sa-Dhan to come out with a manual containing the nature of frauds, how to prevent, kind of guidelines for the staff or the administrative office to use those kind of things. Sumesh?
Yes, Mr. Ganapal, it's what you're saying is in the lines of what I was mentioning in the beginning, that we will be having, we will be coming out with advisories and guidelines on this, like we've been doing on other topics. So this will be definitely part of.
And as a SRO, you should request all the MFIs who are members of Sa-Dhan SRO, they can report the kind of fraud that have been happened in the field, so that it is a learning exercise for all of us. And the sharing is not happening, and that is how the things are increasing, leaps and bounds.
Sure.
As a SRO, you can always ask for the frauds to be reported, like IBA reporting. Banks are reporting to IBA, to RBI. You are in turn reporting to RBI. You can think on that line and try to be transparent so that it is a learning for everybody. All of us will be cautious in what happens elsewhere.
Definitely.
Okay. Thank you.
Okay.
And this analysis will throw a lot of interesting things, whether it is on account of our own staff members' frauds have increased, or the joint operations of the borrower as well as the staff, or borrower themselves, or the middleman or ringleader kind of. This will throw really interesting matter which we would like you to ponder over on this and try to provide this kind of information. And a booklet, a small guidelines how to prevent frauds that can help the operative staff or the controllers to make use of this and implement good things which happen. Thank you.
Thank you. Thank you very much.
So if I can come in, what would also happen is as the industry adopts this, right, the platform, the exchange could become the source of truth for the kind of analysis or insights about how's the trend of frauds, etc., which are happening, and the reasons for the fraud, and those kind of insights could also be provided from the exchange. But the moot point, the important point is adoption by a large part of the members of the industry.
Right. So We have one more question here in chat box. Mr. Avinash Mishra. He's asking that if we come to know after disbursing the loan that a member has taken a loan by giving a fake ID, then what should be done in this situation? Please suggest in such a situation, should the member make payment or wait till the loan is closed? Make prepayment. Okay. So prepayment, I think as a lender, I can answer this question, and anybody can add on. So as a lender, I think you don't tell that customer right away that you have taken a loan by using a fake ID, and you can report it to this platform once it gets ready. But as your money is with that person, that fellow, then you need to be quiet for a while and at least till the time when the repayment is over.
I do not agree with this, because you have to be quiet and bearing the pain.
Correct.
It does not make sense. But the most of them, if I have their strategies to cover it up and recover it from JLG model, or creating the pressure on the customers for prepayment.
But
So,
for the
waiting
future
may
purpose,
spoil the culture of the JLG also.
Yes.
True, when I agree with that point. See, exactly this is the attitude which creates that 10 crores of fraud instead of one client fraud of 40,000 rupees. So we will also always suggest, I think this Equifax bureau, the fraud bureau, can help us in this regard as well. So reporting it as an anonymous case, and that will at least prevent the other companies in lending to that particular client. It may not put your client on list or your credit risk in place. Instead, it will help the other entities to understand, at least if they are lending to that particular client, at least there can be a trigger that, okay, someone tagged it as a fraudulent case. So this is exactly the help which we can get from Equifax fraud bureau.
Right. Right, Chanu. Thank you. So before going to the vote of thanks, this is the last question we are taking. We are about to close. Mr. Pallav Majumdar from JMPL.
Good evening, everybody. This is Pallav Majumdar from Jagaran Microfinance Private Limited. Okay, thanks for sharing everyone idea and the special idea that is making a exchange, data sharing exchange. So I have a question to Sucharita. Actually, we are talking about repository of data and how do we exchange to reduce or eradicate the fraud, different kind of fraud. It may be credit, it may be staff, it may be internal, external, whatever it is. But my question is, how do we validate these things? Because when we, as you said, when we update the badge data, as there is a Vineet already told you how it is different from radar. There is a typical some validation level. Here, if I update some batch data, that this particular are fraud. Now, if somebody, because there is a trend, if I getting money from a borrower, he is my good customer, and now another lender who is not getting, for him, sees a fraud. In case of customer, borrower, in case of staff, everything. So if I submit the badge data as is my borrower, is my borrower, or particular staff, how do you validate? You can check the voter ID, then can return us, okay, here is the name, or this is not matched with our data. But if there is no validation with other lender, this particular member has taken loan and from there they did not submit because they are getting money. How did you validate all these things?
Great question. What I'll do is I'll draw a parallel to the credit bureau while answering this.
Yeah.
So like on the credit bureau, when you submit data to us, you may submit data about Sucharita as a delinquent customer versus another lender as a good, well-paying customer, right?
Yes.
When you submit the data, you are relying on your experience with the customer to submit this to us.
Right.
At our end, there is no way in which we can validate whether the customer has actually paid you or not. We take the data as it is, but while we take the data before adding it to the exchange, we do some level of data quality checks, which could be more of common sense checks and not like whether the field has been correctly populated or not, if it's a document like a voter ID, if the voter ID syntax is proper or not. Those are the level of data quality checks that we can do. But whether the person has actually paid you or not, there's no way for us to find out. Same way on the fraud exchange also, whether the person has actually done a fraud with you or not, there's no way for us to find that out. But we adopt the same quality checks that we have done on the credit bureau at our end. And irrespective of whether you are giving the data on a real-time basis through an API or through a batch upload with bulk data, before submitting the data to us, that level of due diligence is expected from the lender to do, where either you do it through some checks at your end digitally, or you have a maker checker concept, two people from your team who will validate that before submission to help lenders make sure that there is some kind of an evidence and not wrongly classify somebody as fraud. We have made a list of fraud evidence codes along with each of the fraud types. Things that we were showing. For example, if it is under the loan sharing or pipelining case, then you have an internal audit report which evidences the fraud, or you have a field investigation report. Or if there is a loan sharing, then the customer's bank statement is evidencing that kind of a misappropriation of funds. So those are the evidences that we have documented and we will be sharing with the lenders to facilitate them in this journey. So that's the way where we could think we can help. But if there are any other suggestions that you think we can, build across in this journey, happy to discuss and take that forward.
Actually, for that thing, I think you must talk with all lender in MFI industry that they should join and they must share their data in that way, because you have a big database. Other than MFI industry, you have other exchange also. You already told you have already 4 exchanges in different segments. So if all the industry partners join, then the value will come to us in all ways.
Of course.
Is the thing.
Yeah.
Thank you. Thank you.
Thank you. Thank you, Philip. So
thanks, Sobhik.
we are. Oh, yeah. Thank you, sir.
Thank you, Sobhik. So I think we've crossed 2 hours. It's really passed fast because it's been a very fascinating topic. Lots of ideas have come up, but I think we need to close it. I think it's been one of our most popular sessions, more than 200 people, and I'm sure there'll be a lot of questions. We can share presentations. Sucharita, if you're okay with that also, we can, or any other questions we can always answer later. So I'd like to now call my colleague Shoaib for to give the closing remarks and vote of thanks. Thank you all. Shoaib.
Thank you very much. Thank you so much. So we have deliberated over 2 hours on this issue, and it's really, I mean, it's a really, what do you call it? Like, it is disheartening to see that after 2 decades of work, we are talking about fraud exchange in the segment of microfinance. But when we started before 25 years, we never thought of coming up with this kind of thing. But every evolving industry comes up with some challenges. So one of the challenges definitely moral hazard and all those stuff, basically in the segment of this financial intermediation. One of the things I need to bring to your attention, that this product what we are seeing today, it has been delved on, it has been deliberated on for last 1.5 years almost to bring to this status. And this is also the opportunity I should thank all these members. There were 2 committees formed for this one. One is steering committee, all the CEOs were there. And there was like a working committee, all the risk officers were there. I really want to thank the risk officers and also the CEOs to give their time to build up this. Our major challenge was definition of how to define fraud, how to bring a lot of these sub segments into one segment. But anyway, nonetheless, after 1.5 years of deliberation, we could bring up with a very robust architecture of understanding. Now we have to put it in the technology, and Equifax been one of the major stakeholder in this one would be doing a very good job. And I would request our members also to populate it. Unless and until we are populating it, it won't work. Maybe in in 1-2 years, we have to revise the parameters. What Sadaf and other people were telling about that, new kind of parameters may be coming up because this is a very dynamic industry. Now, having said so that frauds of different segment, one of the things where we can protect the industry is through getting the understanding through the data, which we are working with Equifax, and we are coming up with this known fraud exchange. Maybe we'll be calling it in a different name. I mean, fraud exchange, it seems a little bit, it comes up with a different kind of sense, but we may call it in a different way. And the second thing, we are also building up, the protection measures around this frauds. Two areas which we are also looking to work on is the insurance area. So after understanding the frauds, what kind of frauds are there, what kind of dynamics are there, two kinds of insurance which we are working with, and I mean, we have already started implementing it. One is this governance related fraud, governance and like the officials related fraud, and the insurance around it. Another one is very much like people were talking about is the cyber insurance. That's also we are coming up with. So from Sa-Dhan, we are trying to protect the industry. We build up the industry, we protect the industry, we work with the members, we build up all these, all these arrays. Thank you for being with us. Thank you, my colleagues there in Equifax. Thank you all my colleagues in Sa-Dhan who has put efforts to build up this avenue to understand the industry in a better way. And I won't take more time. Thank you all of our members who are always being with us. Thank you very much.
Thank you. Thank you very much. Bye. Thank you.
Thank you, everyone.
Thank you.
Thank you.
Thank you, everyone.